Hello, everybody. How are you doing? Hello, welcome to my webinar, broadcasting live from Mexico City. Here is 8 a.m. in the morning. It's 13 hours GMT time. Welcome to this webinar, WoW Trades. WoW stands for Week Over Week Trades. Well, quickly update about me. I know that you already read this information while you filled in the webinar form, etc., and you received this information of me. But I always like to stress some important points here. My name again is Alberto Alvarado. I am a self-made trader based in Mexico City with more than 10 years of experience. I started trading 2005, and the first 2 years I spent it to having the right approach. Why? Because in 2005 I started with my first live account. It was a $10,000 live account, and I lost it in less than a month. But besides losing that money, what I realized that trading was something that I really want to dedicate my life to. So I took it seriously, and I started learning by myself. At that time, we really didn't have any reliable self-learning webinars, etc. And after the first 2 years, I started making grabbing the first effort, the first rewards of my efforts in 2008. But in 2009, 2007. But in 2008, the financial crisis came, and I lost it all again. So I had to decide whether to quit it or continue. I decided to continue, but 2008 crisis showed me that what I thought it was my final version of my edge of how I understood markets. The 2008 crisis showed me that there were a lot of aspects, a lot of things that were missing for me to really rely on my skills. So I decided to start it again all over from scratch, but including some intuitional and emotional elements that ended up working very good for me. So what you see here is the result of all that. Besides my edge, of course, I use what I call the fundamental dynamic levels, that for the ones familiar, I usually use them when the circumstances reward it. When we try to open more sophisticated or in way more complicated scenarios trades, I use the fundamental dynamic levels as line in the sands to determine whether if it's a good idea to consider a bullish setup or a bearish setup. And besides that, the technical analysis, of course, I use it, but I use it in very simple. I use very free tools like MACD, stochastics, and RSI. I don't believe in custom indicators. I don't believe in buying robots. I strongly defend the idea that the trader is the one that needs to adapt and not the tools. So, well, I would really like to thank you all of you for coming, for joining in, and let's start. Just quickly, for the ones interested, I have a free YouTube channel in any case that you're interested in subscribing there. In YouTube, you go and type IIIBB's Trading Room channel, and then this will show up. You click subscribe, and you could get there the ultimate updates on the trades that we open here, etc., or the insights that I share here. I have used in the past this YouTube channel for these purposes, to update some trades that I opened during the webinars, whether to close them beforehand or in a loss or in a profit, etc., or to update some important events that happen. So it would be a nice thing to see you there, since it's a very good way to communicate. Today it's Wednesday, October the 5th, 2016. We're going to make an overall analysis because, unfortunately, last week I was not able to broadcast due to some personal stuff. So what I really want to do today is to give you an overall outlook of what is happening, because we have the word of the week, of the week, the month, and even the year is called OPEC. What happened last week in all years? The OPEC producers in this informal meeting being able to reach an agreement, an informal agreement for November meeting. It's a groundbreaking stuff. This could actually change everything that was built during these latest 2 or 3 years. I'm going to explain you that in the charts. And on Friday, we will have this month's non-farm payroll number. I will explain you why now the Fed decision is secondary order decision. It's not the most important thing, and won't be until we have much more reference on how the prices of oil will behave in the future. It's regardless now. Even I believe the Fed will even think on delaying the rate hike. I was holding that it was a no-brainer to have it at least increase in December. But with this OPEC thing happening, I wouldn't be surprised to see the Fed even delaying the rate hike for next year. And this is how this OPEC thing is this big, that what it was supposed to be the major news, the Fed rate decision, the how, the when, and how much they should increase, it's now in secondary importance. And well, the some latest events on Brexit that apparently is going to be triggered the Article 50 in March, and how the pound has been behaving, and we're going to get into detail that. We're going to open some live trades at this moment, so I would like you would like to join in. Remember that I open this only as a reference for you. You need to do your own analysis. You need to be consistent in your own trading styles, etc. Okay, so before starting with this explanation, I would like to share the trades that I'm going to open, share them with you here. Okay. Okay. Uh, mm, okay, here it is. Quickly, well, I'm going to open here in front of you a trade on Mexican peso. This is the Mexican peso chart. Well, no, this is the euro. Okay, this is the Mexican peso. I'm going to explain in the next minutes why we are going to open such trades. We're going to open a bullish trade here. The British pound, we're going to open a bullish trade here. And we're just going to analyze the Brent. Okay, so, well, for the ones that are not that familiar in how to use the binary.com platform, well, when you log in, you go automatically to this trade section. Then in this case, I'm going to choose Forex, United States dollar, Mexican peso. The start time you choose whenever you want. I usually choose now. Okay. And the duration, you have two options: to choose duration or end time. Okay. In this case, I'm going to choose a time window of 1 and 2 weeks, meaning that we are October 5th. So the first trade is going to be to expire on next Wednesday at Wednesday 12th, and the other one on Wednesday 19th. Okay, so we select October 12th. You select the payout that fits your risk. In this case, what I believe is that the price of the Mexican peso will be higher on this date of October the 12th. So as you can see, the potential return is 77.3%. So I want to purchase it. You have an immediate confirmation. And this is how the trade is looking. Here the start date, the ending date, it expires in 7 days, etc. Here are the details. The next one is going to expire on October 19th. And again, it's to the upside. And here are the details of this new trade. Remember that these are not meant to be immediately in profit, since it's 1 week window and 2 week window. The other trade that I will open is the cable. It's a cable trade. British pound versus, oh, I can find it. British pound versus United States dollar. This is going to be not an up-down trade, but a touch, not touch. Again, the ending time, one of it's going to be October the 12th. The barrier is 128. And for this time expiration, I believe that the price should touch the 128 in cable. So touches and we purchase it. These are the details of the trade. And the most, the one that I like the most of these trades is this one to expire at the most in Wednesday, October 19th. Again, cable. But this is going to be 128.50. Now you see that the potential return is 41%. So I will buy it. Here again is the contract confirmation. And this is the how this trade is looking just now. To check how all these trades look in one single screen, you go to portfolio. Here are the details of my trades. We have I have a win payout if the Mexican USD MXN is strictly higher than entry spot at close on October 19th. The other one is win payout if the cable touches the 128.50 through close on October 19th. And the other two on October 12th. The other one is if the Mexican peso is strictly higher than the entry spot. And the other one is if the cable touches the 128 through the close of 1 week. So these are the 4 trades that I consider for myself to be interesting. So I just wanted to share them with you. Now let's get straight to the charts because this needs some kind of introduction on the why I decided to open the trades. Well, first of all, a lot of things have happened. The most important thing is that last week we had the OPEC oil producers that, by the way, in the latest eight years, never ever could stand for an agreement. And for the situation so desperate for overall Saudi Arabia, the income of this country relies completely on oil. That they didn't have any other choice but to accept maybe a bad agreement with Iran, just in order to try to increase the income for the country, for Saudi Arabia. So they managed to, at least informally in Algiers, that it's located in Algeria, a potential agreement that will be disclosed in November. Immediately, I want to check this out, the weekly chart. This is the weekly chart. We have here a triangle that, by the way, just started being broken after this Algiers agreement. Usually, technically, when you have a technical pattern being broken, 50% of the times means that it's going to be a failed pattern. Means that a lot of people, when they see a breakout, they usually tend to take the contrarian position because it's where everybody should be buying, so they take the contrarian approach. It works 50% of the times, but when fundamentals align, and the reason I am not pulling the fundamental and the fundamental dynamic levels is because there is no way to charter this kind of surprise decisions. Actually, what happens in Algiers, having the oil producers sitting down, agreeing on something by November, is something that caught the world by storm because nobody foresaw that coming. For 8 years, they hadn't been able to agree on anything related to production and etc. So everybody thought that was going to continue that way, but that didn't happen. So immediately after the Algiers thing, the markets of oil started moving up. And even though the mass media is not mentioning this as one of the reasons why, for example, the cable is evaluating it much more, and why there are a lot of volatility in some stock markets, I believe that the markets of oil are reacting obviously to the upside due to this just up to now undisclosed potential agreement on November. And the markets are moving the prices of oil to the upside. The problem here is that just exactly when the United States was starting to have very decent economic data that could even justify a rate hike by the Fed, this comes in and this ball changes every balance of power that there was before. So the OPEC thing is a groundbreaking thing. It's a huge thing happening. The mass media is not saying you that maybe precisely because they want to profit before letting people know on these consequences that this will have. But I even think that the Fed could even delay the rate hike for next year because they need to measure exactly what the agreement on November is about and what are the potential consequences on the prices of oil. The potential of this movement up to November is to get up to the 70 level. It's a potential. This is not a certain fact. In trading, there are no certain facts. But what I believe is that due to some price action and how the oil price has been behaving, how they behaved in the past, when we have uncertainty more or less of this kind, the volatility tend to move the market in a straight way, in a straight direction, in a very few time. So in the daily chart, I will show you how this exactly, I believe that's going to happen. But taking the weekly charts as reference, you can see that this pattern just being broken, even though it's touching here the upper Bollinger Band. What I believe is that due to this breakout is a fundamental driven breakout. This is not a technical driven breakout. So now the market will try to reflect the new reality of this OPEC agreement. And this new reality is very different from the reality at the prices of 30 and 40. Having the OPEC agreeing on something reflects another reality, and then the price needs to migrate to the most accurate levels to reflect that fact. Okay, so well, this is the weekly trading pattern that we're seeing here. This is the Brent daily chart. I wanted to check this out. We here have a triangle again. Okay. This is when these agreement in Algiers happened in Algeria. The market started moving up. As you can see, it was very discreetly. It managed to break this triangle to the upside, and very discreetly is starting to put these prices gradually to the upside regardless of this. I was commenting to other fellow traders some other time, and I drew at that moment this trend line. That actually what I believe that the market could even continue more or less following this pattern for at least to November. To November, because that is when we will have the final version of this agreement by the OPEC producers. I said that usually, technically, again, when you have a breakout of this kind, the most likely thing is that at some point you will see the price moving down because the market tends to move in equilibrium. But again, this is a fundamental driven breakout. So there is no any relevant level at this moment that could mean something up to the 70 level, even more or less 65. But if this is a transitional time for the prices of oil to reflect this new reality, it will maybe try to retest the bears at the 70 area. So it's a more or less $20 of range. That would be like 40% of increase of price. And you know what happens when you have in a matter of 3 months something increasing 40% of its value? When it's oil, when it's related to everything, all the costs soar. So that besides generating inflation is not a good inflation that reflects a thriving economy. It reflects actually that commodity increased the costs, and that is not what is called healthy inflation. For the current conditions, the worldwide economy, including the American conditions, having this happening could put all the economies worldwide even at the risk of recession. What the worldwide economy during 8 years managed to avoid globally, with this happening at this moment, could even have the effect that it didn't have during these last 8 years. So that is why I believe the Fed will sit back, lay back, and wait to see what happens in November in this meeting by the OPEC, and then decide if they continue with the rate hikes or not. Because rate hike could control inflation, but it's not that simple. You need to know what kind of inflation you want to control, because if it's one inflation like this, maybe considering not hiking the rates would be a nice thing to do. because you will have the increasing of commodity, increasing all the prices and putting the economy two steps back, but at least you won't increase the price of money. So enterprises could ask for borrowed money at lower rates. So that could mitigate the effects of this. So that is what I believe that now the Fed decision, no matter if we're going to have the non-farm payroll number on Friday, I actually believe that the markets would simply disregard whatever the number it is. What I believe is that I don't care anymore what the Fed has to say, at least not before I see what the OPEC agreement is about. After knowing, in fact, what that agreement is in November, then we could start talking about the Fed again. But now everything, and this is something that the mass media is not telling you. I've been explaining through the webinars why that happens. I'm not going to get into that details now. You can check my previous webinars at the binary.com YouTube channel. But the thing is that, yeah, I strongly believe that now the Fed will think even. I wouldn't be surprised that if they see a very aggressive movement by the OPEC, maybe even cutting the rates again, not increasing them. So, you know what, when you have this kind of uncertainties, is when you actually start buying dollars. That's a well-known fact. And that is why I believe that we overall the first doing that was cable. Okay, we're going to get that in the next minutes. So, well, the market just doing these latest 3 days, it's very strange to see a market like oil facing two descending triangles patterns here and seeing 3 days continuously moving to the upside. What I don't like are the volumes on this breakout. But since this is still fundamentally driven, what I believe is that gradually the higher it gets, the more volume will start entering, and that will accelerate the movement. That's the problem with this, and that's why this could simply shake the worldwide economy, because in a snap you can have, in a very, very good day for the oil prices, you can have even a $10 jump, and that would simply jeopardize the worldwide economy, putting them in the brink of recession. So we need to watch very closely all the reference to this OPEC agreement to see if this really has the potential to put at risk the worldwide economy or not. Okay, let me just show you the 2-hour chart of this Brent. Okay, this trend line, I drew it like 2 days ago. Here is the 50 level that usually was a psychological one. And I said that even though that was happening, this should continue moving up. And look what has been doing lately. So this for me is confirming that this resistance of the $50 actually not, it's being disregarded already. So that is why I believe that the next effects are that everything will sink and everybody is going to find refuge in the dollar until we have more reference on this thing on the OPEC. Explaining quickly this relationship. People believe the Mexican economy relies a lot on oil. It is supposed to have an increase of oil prices to hit correctly and in a good way the Mexican economy, but domestic conditions here are not signaling that. Actually, it's a long story, but we have had a lot of rate hikes by the central authority, missing the whole economy. It's a very sad thing here. So even though the prices of oil start moving up, I want to see you this. This is the Clinton-Trump debate. The mass media was very interested in telling you that this drop and this whole 3 years bullish movement was due to that. That's a complete lie, by the way. This is like a very normal technical price action, take a profit taking activity. The market actually, the prices are now well below this resistance of this ascending triangle. But what I believe is following the logic that maybe an increasing of the prices of oil wouldn't outperform the decreasing effects on the Mexican economy. What I believe is that, again, in the meanwhile, people will find refuge in the dollar. And besides, no matter if the oil gets more money for Mexico, the disadvantages of having this will be reflected in slowing down even more the economy. So that is why I opened a bullish trade some minutes ago on the Mexican peso. We are finding more or less stabilization at this mid-Bollinger Band. You need to understand that there are no warranties when you have a trade. You have 50% of the chances at the most of being correct. That's completely normal to have half of them having them right, half of them having them wrong. The difference how you manage the winning ones and how you manage the losing ones. That's the real difference. So according to all this, I believe that, okay, how to play in the 1 week, 2 week time window this thing in a hedged way. I'm going to explain you why. The logic would say that yes, actually this thing on oil would put the prices on the USD MXN lower. I am believing that that's not going to happen. Actually, I am buying dollars here and selling Mexican pesos because I believe that the stronger currency in this current situation is not the Mexican peso, but the American dollar, besides what I explained. So in 1 week, more or less, the price, if it's above this level, or in 2 weeks, those both trades, binary trades, would be profitable. Okay, that's the visual explanation. This is only the 2 hour United States dollar Mexican peso chart. But well, here's really nothing interesting to see. The interesting stuff is in the daily chart and overall in the reading. In the reading that every trader has a different reading of the stuff, of the things that are happening. That's what makes you a trader, to have your own ideas, not the ideas of Bloomberg, not the ideas of Yahoo Finance. No, it's having your own way to understand things. And again, at the end, what counts is how you manage your winning and your losing ones. But you need to be consistent on having your very own approach. So in this case, I bought dollars and I sold Mexican pesos, even though maybe the Mexican peso could, at least theoretically, will be outperforming the United States dollar across the market behavior. So it's a kind of a very questionable trade, if you want. So then what I did here was, okay, this is the pound. And let's go to move quickly to the daily chart. I've been explaining this chart for long. This is the Brexit candle, the gap after Brexit. We've been following the markets weekly here. We opened like 2 binary trades here at some moment, here to the downside, here to the upside, etc. We've been tracking the levels. At some moment here, we opened a bullish, two bullish binary options through binary.com that both were closed in profit. Then at this moment, I received in my price action analysis that something was really ruling out my bullish expectations, and then almost 1 or 2 days after, we had this big red candle and the market continued moving down. Before OPEC, these 2 levels were referenced, the 128.50 and the 128. After OPEC agreement, these 2 levels are completely irrelevant. So now we can see the pound actually moving lower, because these 2 levels had meaning before any OPEC agreement. Now everything is going to be adjusted. The thing is that we really don't know how much, and in some cases the direction. For example, the Mexican peso following theoretically should be to the downside. That trade should be to the downside, but the way I understand it is to the upside. And well, now we just took out the 128, 28.50 support and the 128 trade. Now we are at 127.50 more or less. So what I believe that here I'm taking the contrarian approach to compensate a little bit. My first trade is going bullish dollars. Yeah, and in this trade is going bearish dollars. So you're increasing the possibilities of if something goes wrong, at least you're compensating that with other trade that takes the contrarian approach. That is what is called hedge trading. That's a very, very obvious and like the rule in the investment banking and of course in the hedge funds. For one thing you open in something, you need to find the contrarian, find a market that could hold For example, if you're long dollars, you need to find a way to trade variously the dollar in other markets. That's a very, very complicated and sophisticated, but in this case, the circumstances aligned. I believe that in the daily chart, we have potential of a correction to the 128 and 128.50. This is the intraday chart. This is the 127, more or less where we are. We are forming a double bottom pattern that it's not very good looking, but it's a double bottom. In the daily chart, that is this one, you see that the markets got really close to this lower Bollinger Band. Usually when you have these movements, the markets tend to find some support at these technical levels just to maybe find some more resistance here and continue falling. So what I believe is that in the next 1 or 2 weeks, what we're going to see in the cable is trying to first of all retest the 128 and the 128.50. Those are the both trades that we opened minutes ago. This is the daily chart. This is the 128 that was the lowest after Brexit. This was the 128.50 that was the second the second lowest after Brexit. So now what I believe is that the market, in any case, this will continue moving down. Now we're technically aligning and opening the possibilities of holding a rebound to the 128 and the 128.50. As you see, I am not betting for a 300 rebound. It's actually, it's very nimble. It's even lower than this lower Bollinger Band in the 2 hour. It's a very, very quick, immediate grabbing, just mitigating the risk of the previous trade. So I needed to find a way to mitigate, in any case, that trade doesn't go well. At least this is opening a very short-term time window to succeed. So, well, those are the explanations of this. It's the webinar's already over. I could talk hours and hours on this OPEC agreement, the consequences on Saudi Arabia, the consequences on the European Union, on the potential Brexit. This will have a huge influence on how will be the final shape of the agreement on Brexit, because it's the world, bottom line, the world is not the same after Algiers. Why? Because the world will be very different after having the OPEC agreement on production. That's the only thing I could say. Things are going to be very different. And all the things that we believed that could happen, with this fact, everything is simply spoiled. Everything is reset, and we need to see what starts. It's like rewriting the story. Everything that you thought, including the no-brainer Fed hike rate decision, maybe it could be even delayed. So we need to watch closely. Remember to subscribe. Remember to subscribe to my YouTube channel. That's in the previous. Let me quickly put that before I go. Remember to subscribe to my YouTube channel, because since a lot of things could happen and a lot of volatility could happen in the next hours or days, and since these are week over week, well, sometimes we need something in between to communicate. So in any case, something happens interesting, pro or against the trades that I opened, I will share them publicly with you. So you can follow how I think and how my brain operates and how I manage the things that happen when things go pro or against me. Remember my YouTube channel's IIBB's Trading Room channel. This will show up and you please subscribe. So I would like to thank everybody for showing up. Remember that I expect you next week. Next Wednesday is Wednesday, October the 12th, at the same time, the same place. And I would like to thank a lot Shadis for hosting. And remember, everybody, to trade safe, be safe, and bye-bye.